The car market in 2025 is on the brink of a major shift, and many experts are warning of a potential crash. Over the last few years, car prices have surged at a pace that far exceeds wage growth, pushing many consumers out of the market altogether. Since the pandemic, new car prices have increased by an average of $10,000, leaving buyers with fewer affordable options. Inventory is piling up, and manufacturers and dealers are feeling the pressure. What does all of this mean for you, the buyer? Let's break it down. Skyrocketing prices, the perfect storm. Since 2020, a combination of supply chain disruptions, labor shortages, and rising production costs have caused car prices to skyrocket. Factory shutdowns led to a critical chip shortage, slowing production and making vehicles scarce. This created a seller's market, allowing manufacturers to raise prices, and they haven't stopped. Today, car manufacturers are focusing on higher-margin vehicles, and base models have all but disappeared. These are being replaced by higher trims packed with features and hefty price tags. Trucks and SUVs are dominating production lines, leaving fewer affordable options for everyday buyers. Take the Toyota Tacoma, for example. Historically a go-to for budget-conscious buyers, it now costs as much as $50,000. The Ford Explorer, once considered a family-friendly choice, now starts at around $80,000, alienating many potential buyers despite being produced more cheaply in Mexico. The struggle for affordable options. Even though prices are sky-high, many consumers are still forced to pay these inflated prices, often relying on long-term loans with monthly payments averaging $760. Combine that with doubling insurance premiums, and owning a car is becoming increasingly unsustainable for the average American. One of the clearest warning signs of a potential crash is the sheer number of unsold cars sitting on dealer lots. Across the U.S., inventory levels have hit their highest point in years. Cars that once sold within weeks now sit for months. For example, the Toyota Tundra, a popular truck, now sits on lots for over 200 days, far longer than its typical turnover time of just a few weeks. Its price has ballooned to nearly $70,000, pricing out many loyal buyers. Rising incentives, a sign of trouble. Dealers are now desperate to move these unsold vehicles, and this is reflected in the increasing number of incentives being offered. Rebates are averaging $3,744 per vehicle, the highest in 3 years. Additionally, 0% financing deals are becoming more common, especially on non-hybrid models like the 2024 Kia Sportage. While these incentives might seem like good news, they're also an indication of the overstock crisis, with dealers trying to clear out inventory that buyers aren't biting on. The impact of high interest rates. As if rising car prices weren't enough, high interest rates are making monthly payments even harder to manage. Repossession rates have risen 23% compared to previous years, with more buyers unable to keep up with payments. Banks are responding by tightening lending standards, making it harder to qualify for loans or leases, especially for those with less than stellar credit scores. This vicious cycle is leaving even more cars sitting unsold, unable to be financed. The used car market, scarcity and rising costs. The used car market, while still strong, is facing its own set of challenges. Cars leased during the pandemic are now returning to the market, but there's a catch. Fewer cars were produced in 2020 and 2021 due to the chip shortage, so inventory remains limited. This scarcity has driven up the value of trade-ins, benefiting sellers but making it difficult for buyers to find affordable used cars. However, as new inventory grows and prices start to drop, used car values could stabilize by late 2025. A market correction ahead? Are we heading for a crash? All signs point to a potential market correction. Overpriced models, especially those where manufacturers focus too heavily on high-end trims, are leaving behind a glut of vehicles that most people can't afford. High interest rates and financing costs remain a barrier for many buyers, even with recent rate cuts. Rising incentives indicate an oversupply of vehicles that dealers can't move. Experts predict that new car prices could drop by 3 to 5% by the end of 2025. While this isn't a massive decline, it's a step toward making cars more affordable for the average buyer. How to navigate the current car market. Despite the tough market conditions, there are still opportunities for savvy buyers. Here's how you can make the most of the situation. Look for incentives. Keep an eye on manufacturer websites for deals like 0% financing, cashback offers, and rebates. These promotions are becoming more common as dealers try to clear out inventory. Consider 2024 models. Many 2024 models are sitting unsold, which means better deals for you. For example, the 2024 Kia Sportage is seeing steep discounts right now. Be patient. Spring 2025 is expected to bring the best financing options as rate cuts start to filter through the market. If you can wait, you'll likely save money in the long run. Focus on affordable models. Cars like the Ford Maverick prove that there's still demand for budget-friendly vehicles. Shop around for entry-level trims and hybrids, which often qualify for additional incentives. Don't overlook used cars. While prices are high, trade-in values are too. If you're upgrading your current car, it could offset the cost of your next purchase. The EV market, slowing down in 2025. Electric vehicle, EV sales, once booming, may see a slowdown in 2025. Without federal tax credits and state mandates, many consumers are hesitant to make the switch. EVs are still more expensive upfront than gas-powered cars, and the charging infrastructure isn't widespread enough to convince skeptical buyers. Tesla, however, continues to dominate the EV market. With strong brand loyalty and competitive pricing, Tesla remains a leading choice for consumers. Yet even Tesla may face challenges as more affordable options from competitors enter the market. The shift in the car market. What's next? The car market is undergoing a transformation, and manufacturers must adapt by offering more affordable options, not just luxury models. There's a growing demand for vehicles under $25,000, but few automakers are meeting it. Incentives will play a key role in the coming months. The more deals manufacturers offer, the more likely they are to move inventory and avoid a crash. Rising interest rates and tight lending standards will continue to test the resilience of buyers. By the end of 2025, we could see a broader range of entry-level models returning to the market. The future of the car market. The 2025 car market is challenging, but it's not all doom and gloom for buyers. With rising incentives, potential price drops, and the return of affordable models, there could be opportunities for those who are patient and strategic. Keep an eye on the market, compare offers, and don't be afraid to negotiate. The key to driving away with a deal that works for you is staying informed and being prepared to act when the time is right. What do you think about the current car market? Are you waiting for prices to drop, or are you taking advantage of the deals now? Let me know in the comments below, and don't forget to like, share, and subscribe for more updates on the automotive industry. Stay tuned for more insights, and I'll see you next time.